Okay, today's topic is what? Rate of inventory turnover. This is the last topic in this chapter, right? So first we will understand the meaning of rate of inventory turnover. So what is the topic? Rate of inventory turnover, and first we will discuss the meaning, and then we will see what is the formula to calculate rate of inventory turnover, and how, like, for what purpose we use this rate of inventory turnover, right? So first all of you write down this definition. What is written here? The rate of inventory turnover is the number of times. So this number of times is very important here. A business replaces its inventory in a given period of time. So we will discuss this definition in detail and try to understand what do we mean by inventory turnover, right? So write down the definition. Let's say given period of time is, let's say, 1 year, and in this 1 year, suppose I will be selling goods, and the cost of goods sold is how much? $30,000. Given period of time is 1 year, and this is just my estimation that 30,000 worth of goods I will be selling. Now tell me, do I buy entire requirement? This is the entire requirement of the entire year. Do I buy inventory of 30,000? What I will do? I will buy inventory in small lots, right? Entire year I will be selling this much of inventory. So what I was telling, in an entire year, what is the cost of goods sold? 30,000. So it means to sell this, I should have inventory of this 30,000, right?
Yes.
But no businessman will buy entire year's requirement in one go, right? So suppose the businessman is keeping every time how much inventory?
3,000.
Every time you go to his shop or warehouse, 3,000 worth of inventory you will find. And by keeping this much inventory, how much he will sell? 30,000. So total, how many times he need to go to the market and buy the inventory?
10 times.
10 times. So this is the number of times. First I will buy inventory of 3,000, I will sell it, right? Then again I will go to the market, again I will buy, and again I will sell it, right? So like this, how many rounds it will take? 10 rounds, 10 times to reach this cost of goods sold. What is that cost of goods sold? What is the cost of goods sold? 30,000. And this is the average inventory every time I am keeping in the business. So to make this cost of goods sold, I have to, by maintaining this much inventory, I have to go to 10 times. So it means number of times a business replaces its inventory in a given period of time. Understood? Otherwise, one more option you have. Entire 30,000 you go on the first day of the year and buy it. But then it will create lots of problem because you need more space. Storage cost will increase. Second thing, if in between something happened to your goods, if suppose your product is very much fashion oriented, after 2 months fashion got changed, that could be also one reason, right? So there is no like point buying entire year's requirement in one time. Invest in a small quantity, first sell it, then again go to the market, buy it, again sell it. So like this, how many times I need to go? 10 times. So rate of inventory turnover shows that how many time a businessman went to the market, brought the inventory and sold that inventory. And this inventory turnover rate should always be high. Right now it is how much? 10 times. Next year I will try to make it 12, 15, 20, like that. The more it is high, it shows that I am investing only limited amount in the inventory. By maintaining limited inventory, I am achieving this much of cost of goods sold. So this shows the efficiency of the business, right? So it is not advisable that entire requirement you go and buy in one time only. If you do that, your inventory turnover rate will be how much? 1 only. So that is not at all good. Only you can save the transportation cost. Reason why? Because you no need to go again and again. So transportation cost you can save. But there are certain drawbacks you will be facing. First drawback, what I explained? Storage cost, you need more space.
Change in demand.
Change in demand, change in fashion. If fashion got changed, So your stock is now outdated now, whatever not sold, whatever is still left in the business, that is old fashioned. No one is going to buy, right? So there are lots of problems. So that's why buy inventory in small quantity. So this 3000 definitely I will be selling in how many months? Probably 1 month. After 1 month I will go to the market again, I will buy new inventory, right? So how many times I need to go to the market in this example? 10 times. So that is called rate of inventory turnover. I hope understood. And what is the formula to calculate that rate of inventory turnover? So write down that formula also. Cost of goods sold divided by average inventory. So this is the formula we will be using to calculate that inventory turnover. Cost of goods sold divided by average inventory. In my example, what is the cost of goods sold? 30,000 and average inventory 3,000. So it means 10 times I will be replacing my inventory with the new inventory. And this rate should be lower or higher? Higher. Clear? Okay. So one question we will solve and we will find out the rate of inventory turnover. So we will be solving this question. Read out the question. Was it? So using this information, you calculate inventory turnover. What is the formula? First write the formula. Inventory turnover. What is the formula? Cost of goods sold upon average inventory. This is the formula, right? So first I am showing how to calculate average inventory. Average inventory. So average inventory means opening inventory. What is the opening inventory? 4,500 plus closing inventory 4,800 divided by 2. So both you will add opening and closing inventory and divide it by 2. Then you will be getting what? Average inventory. So if I solve this, 4,500 plus 4,800 divided by 2. So this is the average inventory I got, 4,650. Now calculate cost of goods sold. So average inventory I got. Now cost of goods sold. How to find cost of goods sold? For that we will be using this. Sale is given and margin is given. What will be the cost of goods sold? How you will find cost of goods sold? So here how I will find sales minus gross profit na? This formula we will use. So what is the sales actually? 20,000. And what is the gross profit? Margin given. Margin means a percentage of gross profit based on sales, right?
So 5,000.
So 25% of that 20,000. How much it will come?
5,000.
What is the sale? 20,000 and its 25% is the gross profit. Clear? So you will get what? 20,000 minus 5,000. So your cost of goods sold will be $15,000. So this is how I got cost of goods sold. Sale minus gross profit. Sale is 20,000. Gross profit is 25% of sales. That is 5,000. 20 minus 5, 15,000 I got. Now we got both the variables of the formula. Now how to find inventory turnover? Cost of goods sold is how much? 15,000. And what is the average inventory? $4,650, right? So 15,000 divided by 4,650. So I got inventory turnover 3 point. Let me calculate it up to 2 decimal place only. Yes. So what is the answer? 3.23 times. So almost we can say 4 times we need to go to market.